Okay, are we on? Yeah, we are on. So today we'll be dealing with false breakout or fake out as they are known. So a fake out is when price temporarily moves above or below a key resistance or support level. And they are very problematic for breakout traders. So my strategy also includes using breakout as confirmation. So you find out that if you are caught in a false breakout, it can be very devastating. So what happens in order for you to can spot if something will be if a move will be a false breakout or not? You start by using what we call multiple time frame analysis. Multiple time frame analysis simply means that you use different time frames for analysis. You check specific things on different time frames. So as you can see, we have the 1 minute chart up until the monthly chart. So you can select whichever chart you want based on your strategy. So mine usually focuses from the 15-minute chart up until the weekly chart. So what you will do first, okay, or this is what I do. I start on the 4-hour chart because it's the 4-hour and the 1-hour chart are sort of in the middle. So by using them, I can sort of get the direction. Of where the market should go next. So this year, I started by realizing that we have a resistance level at this point here. It was a previous resistance here. We had some resistance and an M formation, as you can see. This is an M formation. We had it at first, then price went down. Price dropped, then came back onto that level. But then what did it do? It rejected. But then the rejection is only seen on the 4-hour time frame. If you go to the 15-minute chart, you can see that because this type of candle usually signals a strong buy momentum. This bullish candle before the bearish reversal, as you can see, price broke out from this sort of consolidation, because even if we include the session strategy, you can see that this was the Asian session, so it was some sort of consolidation. Then we had a break to the high using this candle. You see the momentum on that candle and the candle to follow. So if I have my resistance here, and it breaks, usually what most people will do is go in on the buy after this close. Why? Let me tell you a reason why these people like making the false moves. It's because, okay, let me go back. It's because, as you can see here, right, it's a breakout. First thing is a breakout. So we have people who have seen this potential of a multi-session M formation, right? There are people who have seen this multi-M formation, and then they are going to sell this currency pair. They are going to sell USD CHF. So when they sell, usually, because most retail traders are taught that if you are going to sell based off resistance, you put your stop loss at the previous resistance area or the previous resistance point. So we had this initial confirmation. We had before it rose, there was this candlestick formation here. We had a rejection, then it came back and started to drop. So usually what you will do is place if you are selling at that area, you will place your stop loss right on or a few pips away from the resistance. So your stop loss will be on that green line or somewhere above it, somewhere around here. And sorry about that. And for those who are breakout traders, they've already set their pending order, their buy stops. So you see, at this level right here, this is where the money is. Why is there money? Because people who have sold have put their stop loss right there on this level here. It's where the stop losses are, and there are those who have prepared to add more buy positions because resistance has been broken. So others are going to go in manual. Others are going to go in manually after seeing this candle right here. They will go in manually with a buy, and others have set pending orders because usually most people will be told set a buy stop at this area here, because if price breaks out, that means it will continue going up. It's logical. But then there was this information. It's not completed yet. It's a possible one, and it's possible that it might continue going up. This was just to trigger the buy stops and blow accounts as it goes down, or also to stop out the ones which knew that this pair was going to sell. So they hit your stop loss, then quickly pull away from the zone. They reverse. So we have different types of resistance levels. We have the horizontal resistance, which is this line right there, and the diagonal resistance, which can be seen or which can be plotted using a trend line. So with that being said, we have breakouts or false breakouts in both the resistances. So it's to make you believe with all that you have. You place all your money on this area being a buy, or this breakout being a buy, whereas it's not the case. So what you do in order to avoid being trapped by such moves is that if you use the 15-minute chart for entries, you wait on your resistance and see how price reacts. Because I know many people like having sniper entries, especially on reversals. But then sometimes they can be a bit dangerous. They need experience. So what you do, remember multiple time frame analysis. We went to the H4 and saw that, okay, resistance has been tested. So this is a potential multi-session M formation. We have a potential multi-session M formation. But then we have this resistance. And if we also go on the daily time frame, we have this, what can I call it? Inverse head, possible inverse head and shoulders formation. So right now, these time frames are busy contradicting each other. So if it's a contradiction like that, you wait and see how price reacts at certain areas, resistance, mainly resistance and support areas. So we have that inverse head and shoulders on the daily, and we also have the M formation on the 4-hour chart. So what you do, because there's some contradiction here, what you can do is go to the 1 hour and wait for it to close. The 1 hour close showed you that this one was a false break because price closed lower. Price closed lower. It broke, then it was a temporary break, then it went back into the normal zone. So this will tell you that this is a false move. But then you won't easily spot it on the 15-minute, which is why when trading on the 15-minute chart, you have to wait. Wait and see how price reacts on the resistance. You don't just jump in because it has broken. You don't just say because it's a break, then we jump in. Wait to see. Wait for confirmation. If you're using indicators, I'm sure RSI at this point it's saying I'm overbought. So you have to sell me. Such things can also help. But then, as I was saying, you wait and see how price reacts on this area. As you can see, the next candle or the candle to follow was a bearish one, which tested, because right now, after we've broken that resistance, it's now turned into support. So price came back and tested, but then failed to close lower than the support, which might give people the impression that this is a chance for a buy re-entry. You add more buy positions, whereas it's going to kill you. So after that, we experienced this bearish drop, an engulfing candle. So that's when you could start seeing action. You can see now that, this is a fake out. Then when you go to the H1 or the 1 hour time frame, you find a close below that resistance. So that's how you can actually confirm. So now we have that 4 hour multiple session M formation. We go to the H1, it has closed below the resistance. The 15-minute has given you an engulfing bearish candle. So you see, you have about 3 reasons to sell. If you add on indicators and some other things, US deaths, I think they are about, due to the coronavirus, I think they hit 50,000, if I'm correct. I'm not sure about my facts, but then I think they passed the 50K mark. So see, this is also something negative. We're adding the geopolitical factors in the mix. So you see, we're gaining more and more confirmation that this is a sell. Because remember, when we go back this, we have USD against a safe haven currency. So it's something like that. More confirmation on saying, you see how all these factors, how all these strategies are starting to come together to give you a signal. Hence, lot size number 3, lot size 3, lot size 3. We have more confirmation. It continues dropping. 3. We just put it in. Why? We have more confirmation. So, you see, these are the things which I gradually talk about. The lessons. That's why I say all these things will come together at some point. They may be spread out. They may be individually taught. But then you have to sort of bring them together for confirmation. So, yeah, that's how we can basically say you can spot a fake out before I start deviating from the topic. Multiple time frame analysis, you spot your resistance and support depending on whether it's a downtrend or uptrend. Multiple time frame, support or resistance, wait, see the candle type. Yeah, we can call it the candle type, the candle formation. What type of candle is brought up on that area? What type of candle forms on the support or resistance area? Then after you're seeing this because this is nonsense. This is nonsense from the market makers. They know that we have trapped many people. As I've mentioned before, they are taking out stop losses at this area here, taking out stop losses and also triggering buy stop pending orders. So you see, this right here is nonsense. Wait for this nonsense to clear, get your direction, more confirmation, then finish them off. You flush them, you bury them whole. So yeah, that was a lesson on the breakouts. I don't want to delay you any longer. That was I think we are done. For now. There's always something to be learned. That's what you should know. So for now, we are done.